Hey everybody, I'm live on Facebook. It's Ask the Tax Lien Lady Live, and this is yours truly, Joanne Musa, the Tax Lien Lady, here to answer your questions about investing in tax liens and tax deeds. And Nicole, I have my assistant Nicole with us today. She's going to support me and help me out as I answer your questions. So what I'm asking you is when you come on, just say hello and let me know what state you're from. Give me your questions. And the reason I want to know what state you're in is because tax lien investing is different in every state. Just to point that out, I've got a story to tell you today. I actually had a call with an attorney in New Jersey who actually does my foreclosures for me in New Jersey, my tax lien foreclosures. And another attorney had approached her from my state, from Pennsylvania. They didn't even know that Pennsylvania is not a tax lien state, it's a tax deed state. They wanted to do tax liens in Pennsylvania. There is no such thing. Okay, they didn't know that. It's so different. They didn't realize Pennsylvania was different in New Jersey. Every state is different. And they didn't realize that you don't have tax lien investing in every state. And the other thing that they didn't realize is that it's not online in every state either. In some states, you actually have to go to the tax sale. That's something somebody else I talked to today didn't realize. Okay, so hello, Devon. Nice to see you today. And you're in Texas. Texas is a redeemable deed state, a very popular redeemable deed state because they have a 25% penalty and a 6-month redemption period for properties that are not homesteaded. So very popular place to invest. And if you pick the out of the way counties, it can be very lucrative. Okay. Nicole, I know that we had a question on Facebook that I said I could answer today. So if you could find that question for me and give it to me, I think it had something to do with New Jersey. And I thought it would be a good question to answer on today's Facebook Live. By the way, today is a very busy day. You haven't heard from me in the last 2 weeks. As a matter of fact, we were supposed to have this Facebook Live last week, and I couldn't because I was in a very intensive leadership training. Because of that, Nicole, if you can't find it, just go through your emails because you sent it to me in an email. So it was hard to find on Facebook. It was actually on my business page, not in the private Facebook group. So, but just look for the email that you sent it to me, and I'll find that question and answer it. But as I was saying, I was in a very intensive leadership training, so I wasn't available to do this last week. So I'm doing it today, and also today. We have our wealth building webinar, which I couldn't do last Wednesday, so we are doing it tonight. And I have a very special guest. His name is Daniel Mangena, and he has been one of our speakers in the wealth building conference that we did in January. And he talks about using your money DNA to make money and become wealthy, and he helps his clients become wealthy. So you're going to want to hear what he has to say tonight. The webinar is tonight at 7 o'clock. It is free to come to live. Now, if you want the replay and the replays of all the wealth building webinars that we do, all the archived calls that we do, you can become a member for only $49 a month of wealth building webinars. And if you want to find out more about wealth building webinars, you could go to wealthbuildingwebinars.com. But if you want to register for this call tonight and you haven't registered yet, go ahead and register now, and Nicole can put that registration link in the comments for you. Okay. Hi, Diva. And Let's see. Do you have to run after the county to get your check? I don't know what you're talking about, Diva. You're going to have to be more specific. Are you talking about tax lien redemptions? Is that what you're talking about? Is there any situation where you wouldn't get your money back that you invested in a tax lien? Sure. If you don't, and I was asked this today by a potential client, can you lose money on tax liens? Yes, you can, if you don't do it right. And that's what I'm here for. My clients do it right because I make them do it right. I teach them. I don't make them do it right, but I teach them how to do it right. But you don't have to chase them for the money. If you get a redemption, it's sent to you. In New Jersey, they will check with you first to make sure it's the right redemption amount. In other states, they'll just send it to you. If you don't, but it is good to check up on it if you know that it redeemed. And in some counties, you might want to check and see if it redeemed. In most places, you're going to get it. Now, there are some places where I really don't recommend investing because they're so full of red tape and things sometimes get through the cracks and don't get done. One of those places is Baltimore City. I'll tell you right now. So there are, and this is the benefit to coaching with me, guys. You get to avoid the places that you're not going to want to invest in anyway. All right. Jean is asking, in New Jersey, you get a 5 or 6% premium if the lien is over $10,000. No. Here's how that works, Jean. Some municipalities, not all of them, each tax collector gets to decide whether they're going to have a 6% year-end penalty. What that 6% year-end penalty is if you pay the subsequent taxes in 1 year, the payments that you make are over $10,000, then you'll make an extra 6% on that. The certificate amount has also a penalty between 2 and 6%. So if the certificate amount is more than $10,000, yes, you get a 6% penalty on that if the certificate amount is over 10%. But I wasn't sure what you were talking about, whether you were talking about the certificate amount or the subsequent tax amount. All right. You can get an extra 6% on both in some municipalities, but in all municipalities, you will get a 6% penalty, even if it's bid down to zero and you pay premium, you still get that 6% penalty on the certificate amount when the lien redeems, if the lien redeems, right? Okay. All right, question from Cliff. Is there an affordable place to get boots on the ground in New Jersey? And Nicole, that's not the one that we got recently. That there's another one. And I forget the exact question, but look for another one. But I will answer that one. For boots on the ground in New Jersey, if you're using tax sale finders, if you're a member of the Tax Lien Profits Accelerator, you get access to tax sale finders, which lets you actually look at some of the properties in the tax sale. It gives you 15 property reports a month. It also tells you what tax sales are coming up all around the country and gives you access to the as received lists from the tax collector, or you can purchase premium lists, okay? But even if you don't purchase I never purchased the premium list. I look at the properties in the sale. I first filter the list. If the sale has more than 50 properties and you only get to look at 50. Members only get 15 property reports a month. Coaching clients get 50. So if there's a list of like 200 liens and you only get to look at 15, I would filter the list down to the 15 that you want to look at. And you could filter that list down by type of property, by where it is, like where, and by how much it's worth. And what else can you, assessed value, market value, or the amount of the lien you could filter it by. So I would filter it by enough things to get it down to a manageable amount that I can look at those properties in tax sale finders, look at those reports, and then determine which ones I'm going to bid on. Now, but if you need somebody to actually go look at the property, then what I would do is in tax sale finders, they have a link where you can order a total view report, which is actually getting somebody to go take pictures of the property for you. And you could get an example of what that total view report is, and it will tell you how much it is. Now, usually they're about $20 per property. So I don't really recommend that you do that. If you cannot personally look at the property, now I do not always look at these properties. If I know the area, I won't. But if I don't know the area, I might want to have somebody look at them. Now for the fund where we invest in, you know, hundreds of, we might put bids on, you know, a few properties, 20, 30, 40, maybe 100 properties in a tax sale. We're not going to go look at those properties. We will just look at them online. However, if it is a deed sale or a redeemable deed sale, I will look at those properties. Or if it's a sale close enough to me, I will look at those properties. Now, if I want to look at those properties, but I can't, I will see if I could get somebody to look at them for me. If I don't want to pay $20 per property to get the view report from tax sale finders, what you could do is list a job on Craigslist and get somebody to do it for $10 a property. And I think that's a pretty good, because then even if you have 200 properties to look for somebody to look at, that would be, you know, $200. I'm sorry, if you had not 200, if you had 20 properties for somebody to look at, that would be $200. I wouldn't have somebody look at 200 properties. If you have 200 properties, you got to filter that list down to 20, right? And then if I had 20 properties, I would hire somebody, pay them $10 an hour and pay $200. However, I don't do that because I don't know I'm going to be successful on those properties. Some of these sales are so competitive that I may only get, even if I'm doing this for the fund, we may only get 5 properties. So I don't always look at them ahead of time if I'm going into a lien sale. If I'm going into a deed sale or a redeemable deed sale, and then we're talking about other states, not New Jersey, then I'm going to look at them ahead of time. I have driven down to Tennessee to look at those properties because that's a redeemable deed sale. I have driven down to South Carolina to look at those properties with a client, because you have to look at when you're buying a redeemable deed, and all those properties, by the way, redeemed, but there is a better chance that you could get them in a redeemable deed sale than in a lien sale. And even in Indiana at the commissioner's sale, I would look at those, especially in Gary, Indiana, because some of those properties are really bad. So you really have to look at them first. And then I would just do it myself. I wouldn't hire somebody. I would just take a day and do it myself. Okay. Nicole, I think that's the one I was looking for. So that's great. Good job. Nicole found a question from Judith that was given I think last week or the week before when I was busy in the training that I was doing. What happens if I buy a tax lien and that person declares bankruptcy? If the owner pays that tax quickly, do they pay me the same full interest? Thanks so much. And this is a great question, because here's what happens. Because see, first of all, if somebody declares bankruptcy, the tax collector is not allowed to sell it in the sale. But it's very feasible that you could buy a lien in the tax sale, and then after you buy it, the owner files bankruptcy. So what happens then? Well, it goes to the bankruptcy court, and you, as the lien holder, must be notified. And then when you're notified, you have to respond to the court. You have 30 days to respond. Usually, actually, the court date is given you, and you have to respond before the court date. Okay, and it'll tell you what time you have to respond to. But you just have to give evidence that yes, you have a tax lien on the property, and this is the interest rate that you're receiving. And so here's what could happen. You could be, first of all, you're not going to be able to foreclose until the bankruptcy stay is over. All right. So it will hinder you from going into any foreclosure, tax foreclosure. But also it may lower your interest rate. You will still be paid, but they may, if you're getting 18%, they may say, okay, we're going to give you 8%. So your interest rate may be lowered in that case. I will tell you, this has never happened to me in the 20 years that I've been an investor. Once somebody did go bankrupt after I bought a lien. And here's what happened. I reached out to one of my good friends who is a tax collector in New Jersey and asked him, what do I do? And he said, don't do anything yet. He asked me when the court date was, and it was out quite a ways away, more than 30 days away. He says, wait until 30 days before. Don't do anything yet, because a lot of times these just go away. Because when they enter into bankruptcy, there's certain things that they have to do, that the people that are going bankrupt have to do. They have to pay certain things on schedule. They have to do certain things, and if they don't perform, the bankruptcy gets thrown out. And what happened in this case is the bankruptcy did get out. I really think what was happening in this case is the people that went bankrupt were trying to get the bank to do a short sale, because I think they had somebody that wanted to buy their property and the bank wouldn't take the money. The bank wouldn't do it. They wanted their full amount that was owed them. So they went bankrupt in order to force the bank to do, it's kind of like, okay, well, if you're not going to play ball, we're going to go bankrupt, and then good luck. So when they did that, I think things happened to where the bank played ball and everything got paid off. My lien got redeemed. So I didn't have to worry about it, but it's a possibility. It could happen. It has, in my experience, it has not happened to me. And it's not something that I worry about. Because I'm not worried about losing I have to take a little bit less interest. Yeah. But is 8% still good if I'm getting 18% interest and then it's changed to 8%? Am I going to cry about that today? I don't think so. All right. Diva has a question. If a house has other liens, is that only important or much more so if you're buying tax deeds, not tax liens? I don't worry about other liens on a tax lien until I'm ready to foreclose. And then I need to know what other liens are on there, because they all have to be notified. And I don't care if there's other liens on there, because if there are, then it's more likely I'm going to get paid, because especially if there's a mortgage on there, they're not going to want me to get the property, because that's what's going to happen if they don't pay me, right? So I'm more likely to get paid. So I don't worry about that until it's time to foreclose. Now, if there's other government liens on there, they are not going to go away. But again, I don't worry about that until it's time to foreclose. And then if there are IRS liens, the IRS has 120 days to really pay off whatever you paid and get the property. But if they don't, after those 4 months, their lien drops off and just follows the person, right? But any other government liens, you will have to pay. So if you find out there is like a local government lien on there that wasn't included in your lien, you will have to pay that. The other thing that you might want to worry about are homeowners association liens. In some states, they will stay on the property even after you do a tax foreclosure. Okay, in Georgia, beware. Okay. Okay, Wayne says, can tax liens only be purchased at the official auction? Or can one buy these liens over the counter during the rest of the year? Yes, you can buy them over the counter in some, not all, in some states you can. In Florida and Arizona, you can. It is not a strategy that I recommend, and it is not a good strategy. There is a way to do it that is profitable, but you have to know how. You have to be there first as soon as it's available because it's first come, first serve. And all the good liens are going to go as soon as they hit the market, all right, which is as soon as they're made available. So you have to know what you're after. You have to know that it's coming up. You have to have already done your due diligence on it and get it as soon as it's published. And again, it's a strategy that I don't do because it's too time consuming. Most of the good stuff, by the way, you know, everybody says, oh, there's so many liens, there's so much left over. Just go to the county and get the leftover stuff and get the maximum rate and there's no competition. That's really not true. There is competition. There's nothing good left. Most of what's left over is junk. And in the state that I do a lot of my investing in, it's like pulling teeth. A lot of the municipalities won't even sell you those liens. And even if they do, you have to jump through hoops to get them and actually pay a little extra. Yeah, it's not a good thing to do in New Jersey, regardless. Okay. Jean says, can you pay the liens off if you want? I have no idea what you're talking about, Jean. Please be more specific. And I don't know what your HOO goes 6 months back. Yeah, you got to worry about those HOO liens in some states. Or HOA liens, yeah. Homeowners association liens, condo developments and developments where they have homeowners association liens in some states. Georgia is one of them. You got to worry about them. I think Florida is another. Okay, so Jean, can you be more specific about pay off the liens? I don't. Oh, you mean the other liens that are on a property? Sure, you could pay them off. But that's going to eat into your profit. And homeowners liens can be big. You know, if they go back 6 months, that can be a lot. Yeah, but if you buy a tax deed with a small lien, you could satisfy them. But let me tell you, if it's an IRS lien and it's a small lien, I wouldn't even bother because the IRS will probably just walk away if it's a small lien. And they have to pay a lot of money to get the house. They'll just walk away. Yeah, but you could wipe out the HOA dues, sure. Or see if you could negotiate. I'm sure they want somebody that's going to start paying them. And especially in Florida, they might negotiate. Florida has other things you have to watch out for. They have other government liens that are not included in the tax sale and can rack up over the years that you have to wait for that thing to go into, for your lien to go into a deed sale. Demolition fees, cleanup fees, yard fees if they go in there and cut the lawn, and they can rack up over the years. But you can negotiate those in Florida. A lot of places you can't negotiate those, but in Florida you can. Tong Mei, can we sell the deed with quiet title within the redemption period? No. You can't quiet the title in the redemption period. You have to wait until the redemption period's over to quiet the title. How often are you actually getting the property, or is your strategy more oriented to simply take the 16% for whatever rate you have bid down? If you're investing in liens, you're not going to get the property. I've started foreclosure on, I've been in this business for 20 years. I've started foreclosure on a couple, maybe a handful. I've not actually foreclosed on any of them. They all redeem at some time in the process. In foreclosure now on one that has been vacant for a long time. It's a burnt out, boarded up property. And there's already, it's getting close to final judgment, but there's already been a redemption request. So that one also might be redeemed. Will probably be redeemed, but that's New Jersey. So on the East Coast, you probably will not get the property unless there's something wrong with it. Then you might get it. I've had properties with stuff wrong with them, haven't gotten them. In Indiana, you've got a better chance. As you get towards the middle of the country where property is less valuable, you have a better chance of getting the property. In the commissioner sale in Indiana, you have maybe a 25% chance of getting the property. I have a coaching client who got the property there. I actually have a coaching client who did get property in New Jersey, but it was vacant land. So you have a better chance with vacant land. On the East Coast, not too much with houses. Even in Florida, even in the really poor houses in Florida, the ones that are not very valuable, they're going to redeem. The fund has had a few that they've done tax deed, and I've had other clients that have done tax deed applications in Florida, but haven't actually got a property. They redeem. So if you want the property, liens are not the way to go, Wayne. Go seek out redeemable deeds or deeds, not liens. Not a good way to get the property. Okay. That's what I suggest. Any other questions? Coming up on the 30-minute mark. And I can hang around longer if you guys still have questions. All right, you're welcome, Wayne. And thank you for your support, Nicole. You've been a big support. Could you put in the link, Nicole, I told everybody about the webinar tonight. If you could put in the link for people to register if they haven't registered for the wealth building webinar tonight. It was rescheduled. It usually is the second Tuesday, but because I was in this intensive training for the last 2 weeks, the second Wednesday, I couldn't do it on the second Wednesday of the week. So we're doing it tonight. And yes, I offer a personal training program. I have a coaching program. Thank you for asking, Wayne. And I have workshops. And my membership, which includes all the workshops and a lot of my courses, it includes everything but the coaching, right? And that is very affordable. It's $165 a month for just the membership, okay? It includes access to tax sale finders, which lets you find out what tax sales are coming up across the country, and it gives you 15 property reports a month. But if you want hand-holding from me, if you want actual coaching, I do that as well. And you can actually, and what Nicole has done, she's put a couple of links in the comments for you. She's put in one for the webinar tonight. If you haven't registered, it's free to come to live. If you want the replay, it's $49 a month to get all the replays of all the wealth building webinars we do. But if you want to register to come live tonight, it's at 7 p.m. Eastern time, 4 p.m. Pacific. She put the link in there for tonight's wealth building webinar. She also put the link in for our membership. Okay, now when you go to that page, it's going to show the big button is for the yearly membership, which is a huge savings. You save over $400 for the year because you get 3 months for free if you do the annual membership at $14.95. It's under $1,500 and you save over $400 for the year when you do that. If you want it monthly, it's $165 a month, but there's a link underneath the big button is for the yearly. There's a link underneath that says for a monthly subscription. Click here, and then you can also do it on a month-to-month basis. If you'd like to talk to me about the coaching, I suggest that you fill out the form at taxlinglady.com/mentoring-application. And that lets me find out a little bit about you and your goals and gives you a link to schedule a 30-minute call with me. And we can find out if the coaching is right for you or not. It's under $500 for the year. I don't know anybody that does coaching for that. Tax lien coaching. Most of them want, $20,000, $30,000. This is a fraction of that, a very small fraction of that. And if you've been around and you've done your homework and you've been to some of these other seminars where they try to sell you coaching, and you want my coaching because you've compared it to what's out there. I don't have the link to that, but I think Nicole does if you just want to get the coaching. Oh, go to getprofitabletexliens.com. Yeah, just give them that one, Nicole, getprofitabletexliens.com. And that will explain to you what the coaching is. And you have a choice of either monthly or annually. You save a lot. You save $1,600 when you do it for the year. And it's under $5,000. If you do it monthly, you are still committed to doing it for a year, but you can pay monthly. It will cost you $1,600 more. Yeah, and Nicole has put the link in there for the coaching. Okay. Okay, do we have any other questions? Okay, Wayne says, just curious about where I spend my education dollars. So would like to get on an idea of the business model and what's involved. Okay, Wayne, this is it. My strategy is going to the tax sale. That is what I do. Whether it's online or live, tax liens, redeemable deeds, or deeds depends on you. How much money you have to invest, what your goals are, what else? Where you live. So that's why you fill out that form before I do a mentoring call with you, because I find all that out. And then when I have your first coaching session with you, we'll determine the best place for you to start. and I'll take you through all the steps that you need to do. Also, if you go to that page, that getprofitableTaxLiens.com, and just scroll down that page, you'll see a couple of video testimonials from actual coaching clients. Now, both of those clients invested in liens in New Jersey, a very competitive state, but they still made out well. One of those clients actually foreclosed on land in New Jersey and invested from. He was working in Africa when he invested. He did both online and live sales, and he also foreclosed on a property in Indiana, and he has a sister here in New Jersey who actually could look at the properties for him in New Jersey. The other client on that page is from Brooklyn, New York, and she doesn't even drive. She went to live sales and took public transportation to all the sales she went to, made 7% on her money in 6 months. And I have other clients too that, have other testimonials. I have a client who bought a property out here in Pennsylvania. I have a friend, he was from New York. I have a client who bought in Indiana at the Indiana Commissioner's sale and foreclosed on one of the properties. He bought 3, foreclosed on 1, the others redeemed. I have a client from North Carolina that I went to a South Carolina sale with. Now, when I actually attend a sale, that is not just coaching. That's a VIP day or a VIP 3-day weekend. So that's not just the coaching that they did. But I went to a tax sale in South Carolina with a client from North Carolina, and he got 4 properties for redeemable deeds for $15,000 for all 4 of them. They all redeemed, and he made 12% on his money. One of them redeemed immediately because they weren't supposed to sell it in the sale, but he still made 3% on that one, and he made 12% on the rest. Okay. Okay. Okay, so I'm reading your next question here, Wayne. Okay, so you wanted to move into a more passive role, put some capital to work in a safe investment vehicle. If you want to be really passive and you're an accredited investor with $100,000 or more to invest, I am now the manager of a tax lien fund, and you can invest in that fund. I am the acquisition manager, one of the acquisition managers. There are 2 of us. I am not, one of the financial advisor guys or the onboarding person or the marketing person. So if you'd like to find out more about that fund, go to just email documents at Tax Lien Fund LP, as in limited partnership, taxlienfundlp.com. So it's documents at taxlienfundlp.com. Send an email, tell them that you heard me speak and you want more information on the fund. You can also indicate that you are an accredited investor, and then you'll know you're serious, because they get a lot of requests, and then they don't know, because they get a lot of spam also, so they don't know which ones to respond to. But if you tell them that you heard me talk and that you're an accredited investor, they will respond, okay? You'll hear from either Mitch or Michael. Mitch is our marketing guy, and Michael is on charge of onboarding. And he's one of our financial wizards. Okay, yeah, if you're an accredited investor and you want to put $100,000 to invest and you don't want to do anything, you want us to do it all, we can do that for you. Of course, there's some fees involved, but it's still a good deal. And here's the trade-off. You do not have control. The liens are not in your name. You get a share of the fund, and the liens are in the fund name. Okay. So when you do something like that, you get completely passive income, but you lose control. If you want control and you want the liens to be in your name, then the best way for you to do that is to hire me. And that's the commercial for today. Okay. Any more questions? Any more questions? I'm going to take a sip of water, and this is last call for questions. And I just want to thank you, Nicole, for all your support. You've been really busy helping me catch up yesterday and today. So I want to thank you for being here and doing this. By the way, guys, you all should be on my list. If you're not, you want to get on my list. I just had a newsletter come out today. So look in your junk mail if you didn't get it. Because I have a challenge coming up the first week in July. 5-day challenge. It's free to come onto this 5-day challenge. It starts Tuesday, July 5th through July 9th. And Nicole, you could put in the link for them to register for the challenge. I don't remember what that is. Maybe I do. taxlienlady.com/book/live-training. I think that's it. Yeah, that's, free-training. I was close. Good thing I wasn't putting that link in there. You guys would have all been going to the wrong place. Okay. Yeah, so we do have a 5-day challenge coming up. It will be Tuesday through Saturday after the 4th of July. Okay, I hope everybody had a great Father's Day. I did. Spent time at my nephew's house in New Jersey with my dad and all my relatives. Okay, and yes, there is a subscription agreement, Wayne, and they will send that to you. How long does it take to see the returns? There are dividends paid quarterly, but they're not paid right away. I don't know how long it is because I'm not in charge of that. There is a waiting period before you do get them, and then the rest of the return goes, back into the fund, into, your, you own a portion of the fund. Yeah, and I think it might be 6 months. I'm not sure what that is. Yeah, that's something you'd have to talk to Michael about once Mitch or Michael responds to your email. All right, you're welcome. All right, and RC is asking which link details your membership fee. Okay, so that would be taxlienlady.com/membership. All right, just go to taxlienlady.com/membership. And that should tell you, RC, that should tell you what you need to know about the membership. It's not a sales page. It's not all salesy. It just says you get this. Here's the monthly cost. Here's the year, and here's the, actually it's just the yearly cost and then the monthly cost. And the big button is for the yearly. You save a lot of money if you do it for the year. If you can't do it for the year, you could do it monthly, but you're going to pay more than $400 more over the year. And you get into all the workshops for free. Okay. We just and you get recordings of all the workshops that we did already. We just did a tax sale success workshop. We do them periodically throughout the year. The next one, I don't know when we're going to do the next one because we're not going to do it in July, maybe August, either. Yeah, maybe August, maybe towards the end of August. But we're going to be doing that 5-day challenge, and that's free to come to the live challenge. There will be a really small cost if you want like extra. The challenge is going to be like 30 days every day during the challenge. I mean, 30 days, 30 minutes every day during the challenge from 12 p.m. Eastern time to 12:30. But then if you want the VIP ticket, you'll be able to stay for the Q&A, another 30 minutes of Q&A and all the recordings. And it's only $49 for the whole 5 days. Or you could just come to the free stuff. That's fine too. Whatever you want to do. Okay. And Nicole did put the link for the membership in there too. Okay. And then Wayne has another question, and this is going to be the last question, okay? Last question. If you guys still have questions, you can put them here in Facebook, and we will get to them next time. All right, Wayne says, returns on tax liens vary from state to state, correct? Yes, that is correct. I read that Texas pays a pretty high rate. Assume that this is consequently a much more competitive state to buy liens in. Yes, they are redeemable deeds in Texas, not liens, but yes, it's a high rate and it's very competitive, extremely competitive. Okay. But you could still get deals in Texas. It's a matter of going to the right place. All right, and doing your homework. And that's where I come in. All right, guys. Thank you so much for, this was fun. It's always fun when a lot of people show up and give me a bunch of questions. I love it. I love it. I look forward to doing this next time. It is the second and third Tuesday of the month. So the second and third Tuesday of July, I will be here. All right. It's just a different day this time, because I couldn't do it the second and third Tuesday, so I had to do it the first and fourth Tuesday instead. Okay. Have a wonderful rest of the month, and I will see you soon. Bye, everybody.